Hello everyone, this is TheLux. In today's video we will talk about where to invest $1 million. Get comfortable and enjoy the video. Where to invest $1 million? Having $1 million gives you plenty of investment options. Below are some ideas. 1. Invest in the stock market. Investing in stocks. For most people, stocks occupy the largest part of their portfolio since they provide growth. Investing in stocks can also help hedge against inflation. The roughly 10% average annual return stocks provide over the very long term will help you cover not only inflation but also grow your portfolio. Including inflation, this 10% works out to 7%. You can invest in stocks through exchange-traded funds, ETFs, which we'll cover in a moment, or by building your own portfolio of individual stocks. If you go the individual route, often referred to as self-directed investing, you'll need to open a brokerage account where you can trade stocks. You can choose from one of the many excellent online brokerage firms available. Most will allow you to trade free, such as Ally Invest and E-Trade. However, keep in mind that stocks can fluctuate in value. In 1 year, you may feel the exhilaration of a 25% gain, only to get clobbered with a 20% loss the following year. You need to maintain your composure through the ups and downs, knowing that the long term can work in your favor if you have a diversified portfolio. 2. Invest in bonds. Bonds and interest rates of investing in stocks is about providing growth in your portfolio. Bonds are mostly about capital preservation. Since they pay the full face value at maturity, you'll at least get back your original investment if you hold until the bond matures. In the meantime, you earn interest income. Bonds work to counterbalance the risk involved in stocks. Because they're interest-bearing and guarantee payment of principal, their values tend to fluctuate much less than stocks. In fact, shorter-term interest-bearing securities, typically those with maturities of 5 years or less, hardly fluctuate at all. Longer-term bonds, such as those with terms of 20 years or more, can rise and fall in value based on changes in interest rates. Bonds are available in different types. For example, you can invest in corporate bonds, U.S. government bonds, municipal bonds, and even international bonds. You can buy bonds either directly from the government or through a brokerage account. 3. Invest in ETFs. ETF 101. If you're not comfortable choosing individual stocks and bonds, you can invest in exchange-traded funds, ETFs. These are low-cost funds that invest in either stocks or bonds and are often based on popular indexes. For example, if you want to invest in large company stocks, you can invest in an ETF that's based on the S&P 500 index. The composition of the fund will match that of the S&P 500. ETFs are designed to match the market, not outperform it. But that has a big advantage in that it won't underperform either. It's the best way to invest in the general market without taking on the risk that comes with individual stocks or bonds. ETFs are especially important with bonds because they allow you to invest in a portfolio of many bonds rather than choosing just a few. ETFs, unlike mutual funds, don't charge low fees. They also have very low expense ratios. This means you'll get to keep more of the investment return they provide. You can use brokers such as public.com to invest in specific sectors such as international stocks, financial companies, energy, precious metals, healthcare, or technology, among many others. 4. Invest in a business. Coronavirus and small business. This can be one of the most lucrative ways to invest your money. It can be done in one of two ways. Either you invest in a business that you will operate, or you act as a silent partner for an existing business. If you're going to invest in your own business, you can either start a business from the ground up or buy an existing business. Buying an existing business will typically require more capital, but it will be a lower risk than a startup since it's already established. Either way, make sure you're familiar with the business and feel confident you can make it a success. The failure rate of new businesses is uncomfortably high. If the idea of starting your own business doesn't interest you, you can go the silent partner route. This is when you invest money in a successful, established business that's in need of capital for growth. In exchange for your investment, you'll get a share of ownership of the business. This will also entitle you to a percentage of future income. It's less risky than starting your own business because you're investing in an established company. But it's also a passive way to earn money on your investment since you'll act as an investor while the original business owner operates the business. 5. Invest in rental properties. Investing in a rental property. Another way to invest $1 million is through renting individual properties, including single-family homes, multi-family homes, small commercial properties, or even specialized projects like fix and flip projects. Historically, real estate has been one of the very best long-term investments. However, it has the disadvantage that it is a very hands-on venture. In fact, it's really a hybrid between investing because of the capital you need to put into each transaction and business because of the direct involvement you have in the purchase, management, and sale of the property. On a long-term basis, real estate can be very profitable. For example, if you make a 20% down payment, $60,000, on a $300,000 small duplex and rent it out for a combined $2,500 per month, you'll make a monthly profit while also paying the mortgage. After 30 years, the combination of property appreciation and paying off your mortgage will give you a mortgage-free property. You then have the option to either sell the property at a huge gain or continue renting it and reaping an even larger net cash flow. 6. Invest through real estate crowdfunding. Crowdfunding. If you like the idea of being more directly involved in specific real estate deals but don't want to get involved in the day-to-day details of the process, you can consider investing through real estate crowdfunding. There are many different real estate crowdfunding platforms to choose from, and each has its own specialization. For example, you can choose a platform that invests in individual commercial buildings, or you can choose individual residential properties, or even fix and flip opportunities. Our recommended service is CrowdStreet, as it offers only commercial real estate and charges no fees. Real estate crowdfunding offers you an opportunity to invest in either an equity position or debt to finance real estate projects. It's a classic high-reward, high-risk venture with the potential for loss. For that reason, many real estate crowdfunding platforms require you to be an accredited investor. But if you have $1 million, you'll automatically qualify. There are many ways to invest $1 million. The good thing about reaching the $1 million mark is that it gives you plenty of investment options. But the basic investment objectives are the same as if you had a much smaller amount of money. You'll still want to come up with the best combination of growth, income, and capital preservation. It's possible to do, but it requires diversifying your funds. You need to decide the best investments and best accounts for you. Thank you guys for watching this video. We hope you learned something new. See you in the next video. TheLux.